Good morning, traders. Thanks for joining me today on this new episode of our Trader Bite. This is episode number 1935, 1935. It is 8:05 a.m. Chicago time on 10th of February 2021. Hello, everyone. Trying out the webcam setup from my office. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. You're going to notice my eyes are going to be all over the place because I have a 4K TV and some monitors off to the side. So bear with me. I'm trying this out. I feel like it makes more of a personal connection to see the person you're speaking with as opposed to just a voice. Anyway, many of you have probably seen me on various programs, Futures IO and futures with trading futures and so on and so forth with Credelli. Let's jump right into the summary sheet. The summary sheet, another day of risk on sentiment here. Overall, the market allocation is to risk. We see equities pushing higher. Let me take a look at the updated version. Gold's leading the pack today, up 0.86%, trading at 1853.4. The Russell 2000 is also leading, up 14.9 points or 0.65%. The S&P is up 19 points. The S&P had a nice big pop on the CPI number, pushed all the way up to 3928.50, and so on and so forth. So we see money is moving into risk here. We see the Eurobond down. We see the 30-year bond down and the 10-year down. Copper again pushing. Remember, copper is an industrial metal. Also, China last night announced, released their manufacturing numbers. They're the strongest we've seen since the start of the pandemic. So that's where we stand. This morning, the S&P has traded 169,000 contracts so far, has had quite a bit of range, actually. It says 21. It says 21.25. I believe it took a pop. Well, actually, no, it took the pop before that. And so it's relatively strong this morning. Let me see, 3907 and a quarter. Yeah, it's still 21 and a quarter. Overnight inventory positive 87%. And the overall profile went from being balanced to somewhat of a double distribution profile. The trend up continues, new all-time highs. So that's where we stand. There's a bunch of stuff we need to look forward to today. Wholesale inventories, EI, natural gas, crude oil inventories, U.S. budget plan, and of course, Fed's Chair Powell today, so pay attention to that. But we'll see how it is today. Hopefully not another choppy, boring day. Let's take a quick peek at what we expected yesterday versus what we got. Let me adjust this screen a second. There we go. I meant to catch this other guy. Oh, it's locked. That's why. Okay. So yesterday, the expectation was for a push to the overnight high, somewhere around 3907.50, 3908. Was really looking for that drop into 91 and 87.88 on the primary scenario. The secondary scenario, remember yesterday we opened in range, in value, or just outside of value of the prior day, and the expectation is we are likely to test through that value. We're seeing some exhaustion from buyers on this push higher on Monday afternoon, and then this tapering down on Tuesday's overnight session. So Was looking for a push higher and an exploration lower before the continuation up, but that's not what the market had in store. Camera's in the way. Here's what it did. Now remember, I was looking for a push to 39. Oh, hang on. Boop, boop. All right. Was looking for a push to 39.07, somewhere in here. Was looking for it to drop down into the 91 first, and then 88.87 before it consolidates down here. That was scenario one. Did not happen at all. Another day of just choppy back and forth. Nice little test of VWAP and mid here for a continuation through the IB high. Range extension up into 39.08. Barely range extension up, actually only 2 ticks, not 3. And then these wide up and down rotations. Let me move myself out of the way here. As you could see, the delta was just back and forth, moving with price, moving along with the open. Overall, I'm seeing a commitment from buyers and price, but I'm not seeing a strong commitment to lift, right? And that's expected for new all-time highs. I mean, this is how it's going to be at new all-time highs. It's going to be buy and hold, then some moving average crosses over, some OTF comes in, buys, holds, and there's a little spurts, buy and hold, buy and hold, buy and hold, until the market is perceived to be overvalued, or news comes in and forces a push to the other side to discover price lower. But in either case, we have relentless buyers, and this continues, and there's no reason to expect any different. I'm not seeing any clear signs that the buyers are done. And look at the delta and where it finished yesterday, just really lackadaisical. And if you look at the delta versus the impulse lines, these red lines get adjusted every Sunday night for impulses. The delta versus the impulse lines, we have one impulse for the entire day. This is really bad in terms of those who need volatility to be able to find and control trades better. I'm one of those people. I prefer volatility. Give me a 60 VIX any day over a 12 or a 15 or even a 20 VIX, and I'll take it. So this is more of a grindy, slow. One of the things I talked about in the trade talk session for members yesterday for Convergent was, if you look at the Renko, at this 4-tick Renko. So if I look at the setting here, it should be 3 pixels per bar. You have an entire day represented in a third or even a quarter of a screen. Remember, you don't get a Renko bar unless you have a good enough rotation. And these last 3, you can fit the last 4 days. 4 days, you can see that white line there. This represents the beginning of a day on one screen. And if you go back during the times when it was volatile, look at this. Same setting, 3 pixels per bar. 3 pixels per bar. And you can see that this day took up basically a little over half a screen. It's kind of a non-technical way of looking at how much rotation and how much action we're getting in the market. But I like Renkos for that reason. I like point and figures for that reason. I like range bars for that reason. They tell the story in terms of how much activity there really was versus a time bar, which will print a bar at the same time, at the same moment, all the time. So my point here being, look, there's not a lot of activity here. This is typical action of new all-time highs. And it really requires us to be patient and to wait for the market to kind of set things up. It's not my favorite, so I prefer to go to, the NASDAQ or something else and look for rotations there. You can see the NASDAQ is also staying inside of its impulse lines, but it's giving more rotations. You find out fairly quickly in the NASDAQ whether you're right or wrong or what you have coming to you. So this to me is a period where I prefer to just look for thinner products, NASDAQ, crude oil, and so on. I'm not recommending you drop your product and go move. It's just what I do, okay? So that's the prior session. So based on our review, you could see there was a small pullback. So on this chart shows about 93, 94, small pullback, and then a push to that measured move high. Now, measured move high was not achieved yesterday. That level is at 94. And we didn't get there yesterday. We stayed at 13, or 12. I think it was 12 and a quarter high, right? Let's see. Yesterday's high, 12 and a quarter. And here we are at the measured move. So if I turn on the master levels, you can see the measured move combo up here at 24 got poked through to 28.50, and the market has come off a little bit and is trading right on top of the 24 measured move here. We expect it to get tangled a little bit, and it is. So that's where that stands. Again, 173,000 contracts, not heavy, not too light. It's average, and then the range 21 and a quarter is pretty average. We keep churning, and the whole thing keeps going on and on and on. So let's take a look at what we've done. Look at this compression here that's taking place. We have a nice little compressed range. Here's the range stat, or the range pane. This here is giving us is showing the range for every day. This is pit session only, so each bar represents one pit session, 8:30 till 3:15 Central, 9:30 to 4:15 Eastern. And you could see that the range is just collapsing, and the volume is as well. It's just falling off. The range is below the point of control over the last 20 days, which is at 35. And we're getting a lot less range. The entire session yesterday was 17 and a quarter points in a pit session. That's pretty, no pun intended, pretty pitiful. But also volume has fallen off. Yesterday's volume was somewhere around 35% below what we would expect on any given day. And so, again, this is just the peril of playing in all-time highs. So for me, 39.24 was the next target up. The key areas below 39.08 is now in play. This is the MC point of control so far this week. In the last 2 days, 39.08. That is expected to be the base or the foundation of support. If that gets given up, then we are looking at the 88 below there. See how the 88, 87 kind of move together here? 88, 87. Below that, we get down into the 62, which is the high of this bar, the low of this bar, and the high, the previous all-time high. The 62 to 64 area becomes the next support. Below that, the next support is 45 to 48. Below that, the next support is 38.30. Below that, the next support is 37.95, right? So it's very, very structured, very clear. You can see these clear lines here. 38.30, 38.48, 45, 38.62 to 65, 38.87, 88, and now 39.08. So lots and lots of areas of support below, and nothing above us, just new all-time highs. And down here, you can see the delta is just pushing up, pushing against the floor. It's just flat. It's not able to get off its ass, right? The delta is just completely flat as the market pushes higher. This does not mean that we are likely to turn, but what we have is a market that is wedging up or compressing as it pushes into and towards the 4,000, big millennial number there. So that's where we stand. Let's hop to it and get to our expectations for today. Again, you're going to see the same kind of plan, same thing, same approach, same market, so same process. And you know, unfortunately, there's not much we can do about that. We have to take it as it comes. So what are we expecting for today? Inventory is about 90% long, 90% long. In fact, let me check it real quick. Boop. Overnight inventory. Current overnight inventory. Oh, 76.50, so it's fallen a little bit. 76.5%. Still pretty decent. The expectation this morning, open auction, out of range. We're opening in a gap up, looking for responsive selling back into the overnight point of control. 39.18 is the next big area down that I had marked. Consolidate in this area. This brings us into the full session view app, full session mid, and the overnight point of control stacked on top of each other. I expect support. I'm going to be looking for longs in this area back into the 39.24, and then a test of the overnight high for the overnight stat to squeeze through. I don't have any levels. I was not able to find and project reasonable levels between 39.24 and 39.85 or 86. It's like there's a huge gap here. You can see there are no stock zones in between here. So anything goes here. I'd have to go look at a shorter time frame, but I'm looking for it to squeeze higher and come back off on the close. That's the primary scenario. So the primary scenario is a pullback, overnight rebalance, overnight inventory rebalance, and we have an opportune area, in my opinion, down in the 39, 18, 19, 20, right? So I'm looking for a bid to come in that area. I'm looking for a long, and then I'm looking for the 28.50 to be taken out for a push into no man's land, no person's land, to be gender neutral, I guess. And then whatever happens there happens. By the close, I expect the market to kind of turn around and pull back a little bit. So that's what I'm looking for scenario one. So so what does that mean? Does that mean I'm going to sit here and not take action unless the market hits that exact price and it's got to follow these squiggles? That's not the point. What it means is I'm going to be looking when it drops. I'm not going to be looking to get short. I'm going to be looking for indications in the order flow of sellers hitting the bid, and the bid being absorbed either through absorption, or while absorption comes in a form of icebergs, or size on the bid that is not movable, that finally gets taken out, and then it immediately rallies after it takes that size out. So that tells me that I need to join the long side and go in that direction. That's what this scenario is saying. Secondary scenario, open auction out of range. Open auction out of range. We'd expect the response right away, but open auction out of range, and it immediately pushes to the 28.50. This scenario creates an exhaustion scenario because the market at this point would have been running for quite some time. I would not look to short the all-time high. That's just a perilous, it might work 1 out of 10 times, but it's just a perilous trade. But at some point, I'm looking for it to fail. Failure to me means it needs to come back into the overnight range. I need to see it pull up, make a lower high or a weaker high, and then squeeze down below. The weaker high gives an opportunity for a scalp short. Shorts are scalps, longs are structured trades to bring us back potentially into the prior day's range, or at least close to the prior day's range. In this scenario, the market's just running away. More buyers, more moving average crossovers, buying whatever funds do. And then I'm looking for that to get exhausted and kind of create a rounded top. And even with the rounded top, I don't see that as an indication that I should get short. Even with a rounded top, I need to see that there's failure to re-challenge that top. And at that point, it becomes obvious. Yes, we're taking price risk for more information. We should be taking information risk as day traders as much as possible, meaning better prices, less information is always better because it brings you closer to a better risk reward. But in this situation, I'm just not interested in shorting new all-time highs. It just doesn't seem like a very good plan. Anyway, time's up. The market's opening here in a few minutes. Good luck. Hope you got something out of today's show and you're better prepared for today's trade. Be patient. It's going to be slow. Payouts are come very slowly, but also we can keep tighter stops, tighter targets, and so on and so forth. Good luck. I'll catch you tomorrow morning. Take care.